Today I'm going to hit three different topics, three different perspectives on the market. One is Jim Rickards, who is going to talk about tariffs and trade wars and the impact on the market. Secondly, Adam Taggart interviews Lance Roberts, and he is going to talk about the idea that what we have right now is a correction in the market, and he'll give justification for that, and that he believes we're going higher. David Hunter also is bullish on the market, and he's a contrarian, and he sees a bull market ahead of us, and even though many people right now are bearish because of a pullback in the stock market. So very different perspectives, three people who I respect, and let's get into it. Hi, I'm Ben Reppond. Welcome to my YouTube broadcast. Today is March 11, 2025. Daniela Camboni interviews Jim Rickards. Now, Jim Rickards, I've read some of his books. He's the author of, I believe, at least 5 books, and a good thinker, independent. Sometimes he has been right, and sometimes he has not been right. So I'll just say that. But I do respect him. And I don't see that he has an axe to grind. From what I can tell, he does not need to sell books to make a living. So, but other than that, I don't see a reason why he would say what he does. What we have going on in the market right now is tariffs and trade wars, and actually, or potential of that, and the potential of a recession. So when the recession word gets mentioned and there's justification for it, a slowdown in the economy enough to create a recession, that creates a lot of fear. And we don't know if that's the case, but that's what's out there. So anyway, Jim Rickards talks about that. I want to have you listen to him. And I do recommend him, by the way. I've enjoyed his books. I think they tend to be very independent. So take a listen to this interview.
Jim Rickards, best-selling author of Currency Wars and many other books, joins us today. Jim, there is talk right now that some exceptions and delays are coming into play. The White House announcing that it would grant a 1-month delay, for example, on tariffs on automakers. But overall, what's your take on what's next on the trade war front?
Well, it's a very big deal, as you point out. Canada in particular is interesting. It's really, as far as Canada and the U.S. are concerned, and to a great extent Mexico and the U.S., although there are other issues in Mexico, it's mostly about the auto industry. Lumber matters, steel imports matter, although that has more to do with China. But, I lived in Montreal for 2 years, and I used to go to the liquor store, and Trudeau said, well, if the U.S. puts tariffs on Canada, we're stripping all the American liquor from the shelves. Well, they didn't happen. I mean, you can't get California wine in a Montreal liquor store. It was French. You can get French wine and other kinds of wine. I also live in New England. You can't get Vermont cheese in Canada. There was the number of U.S. exports that Canada banned: cheese, dairy, wine, liquor, etc., with few exceptions. They weren't buying that much from the U.S. anyway. Auto industry is different. That's a huge deal, and that's really what this was all about. And that's why Trump gave a 30-day extension. He didn't say I'm rescinding the tariffs. He just put them on the other day, a couple of days ago. But he said, well, we'll put them on. We'll hit the pause button for 30 days while we talk. It's a reasonable approach. We'll see what happens. But of course, China was in the crosshairs. China's not getting a pause. Mexico is. So we'll keep talking. We, meaning the U.S., we'll keep talking to Canada and Mexico. The EU's next. They're gonna get whacked. Whether it's 10% or 25%, I mean, it matters, but it's a significant percentage. But Trump's putting tariffs on, pretty much everyone in the world. The Canadian case is interesting. Canada is the U.S.'s largest trading partner by volume. You look at the volume of trade, but the trade deficit, or the U.S. trade deficit with Canada, or Canada's surplus, is not the biggest by any means. I think it's 9th or 10th. So it's the largest trading relationship by volume, but it's not the biggest trade deficit that the U.S. runs. Actually, the United States has a much bigger trade deficit, much bigger with Vietnam. I mean, who's talking about Vietnam? Well, we'll be talking to them, and they might get the same treatment. But like I said, it's really about the auto industry and subsidies, and it's very popular with the U.S. auto workers in Detroit and elsewhere, obviously.
Okay, Adam Taggart interviews Lance Roberts. Lance Roberts is talking about the state of the market, and he believes that we are going through a correction in the market, a normal correction. And he says corrections are normally, and just use the S&P for example, because portfolios are all different, but corrections tend to be 5 to 10%, and that's just normal. Nobody should get excited about a 5 to 10% correction. Nobody likes it, but it's not something you can really manage for. And I checked this morning, today as the recording of this, and from the S&P 500, we are down about 8% from the top of the market, which was, by the way, about 3 weeks ago. So now the S&P the NASDAQ is different, and the Dow is different. The Dow is down less, NASDAQ is down more. I understand that. But from a benchmark standpoint, down 8% is not something that most investors, longer-term investors, should be excited about. So, but take a listen to the interview with Adam Taggart and Lance Roberts.
Rough week for stocks. Last week, we were sort of raising the question, was the sell-off over? This week has shown, at least up until Friday morning, no. But I have been following you on Twitter, Lance. I'm going to guess you are going to tell us here that the market is probably quite oversold in the short term here, but don't let me put words in your mouth.
Yeah, no, that's pretty much the case. If you take a look, kind of, it's actually let's just back up here real quick. It's actually very interesting what's going on. So I wrote an article last week talking about bearish sentiment. I think I shared some charts with you, but bearish sentiments among retail investors is at levels that are on par with the financial crisis, the 2020 pandemic, et cetera. So, investors are about as bearish as they can be on the overall market. The market's down about 7% from its peak. So we've had a very mild correction, and yet investors are treating this like, oh my gosh, this is, a huge market crash and everything is over now. And you don't have to go back very far. We had a 8.5% correction last August, which was the whole issue with the yen carry trade blow up, and everybody was like, oh my gosh, this changes everything. The yen carry trade's blown up, and dollar de-dollarization and all that. And of course, then the market rallies back and hits all-time highs. Go back to April of last year, and you and I were talking here on the show in February, March, saying, hey, markets are super overbought here. You're going to get a correction. And we had about a 6% correction in April of last year. So, these corrections happen all the time. The average correction in any given year is 5%. 10% corrections are not uncommon at all, and are generally good buying opportunities to put money to work. And this is the fascinating thing about investor psychology, is that 2 weeks ago, markets were hitting all-time highs. And everybody was talking like, well, the AI, growth narrative is changing. DeepSeek changed the growth narrative and the outlook on earnings and all those type of things. Well, something that we've been writing about since the beginning of the year is that earnings expectations are too high. Markets are going to have to reprice for a new reality. Wrote an article called Curb Your Enthusiasm. Says, hey, expect a lot more volatility this year as markets reprice for a slower than expected earnings growth. So that's what's going on here. All we're doing is now we have repriced a lot of these stocks for a slower than expected earnings growth rate.
Now, finally, I wanted to share something with you from David Hunter, who's an economist and a market technician, I guess. And he's been at it a long time. I'm going to guess about 40 to 50 years. I found him to be pretty, over time, my perception, without keeping score, my perception is that he is a good analyst, and his predictions tend to be correct. It's very hard to do predictions, and when you put a number on it and a time frame on it, but he says, and I think correctly so, that he has gotten it right as far as the direction and the magnitude. What he has missed at times is the time frame. And he points out that's very hard to do in a bull market because the time frame usually doesn't coincide with what you think it should be. But just getting the magnitude of it right and the direction right, that's a big deal. So anyway, he is a contrarian. So he sees things from the opposite side. So for example, if the market is going up, he's going to see when does it get to the point where he starts to see more downside than upside, and vice versa. When the market pulls back, when does he see more upside than continued downside? So from here, he is making the case that there's been a pullback and that from here, he sees more upside, and he's bullish on the future from here, I would say, for the rest of the year. And but it's a different point of view. But the contrarian point of view is something that I can understand. There are times when the market has a contrarian view to it. In other words, it's oversold, and it tends to go up. There's times when it's overbought and it tends to go down. There's also times when it's trending down and it continues down, and vice versa, trending up and continues up. He believes we're in one of those correction periods where he sees upside from where we are today. So take a listen to this interview with David Hunter.
Before we actually go into the interview, I want to invert things slightly, because at the end we normally talk about handles, and I thought it's really important to say right at the start, because you've got now over 200,000 followers, a lot of people kind of imitate you and pretend to be you, and a lot of the discourse you have is via Twitter. So your handle is Dave H Contrarian. So the name Hunter's not actually even in there. So Dave H Contrarian. So for anyone who wants to follow you, you've got over 200,000 followers and rising. So it was 196,000 when we first started speaking.
Really?
So obviously doing something right.
It's the state of the market's boost, the inevitable boost effect.
Yeah, I think there's a bull market in me for now, anyway.
Well, absolutely. There is definitely a bull market in you, and there's a good reason for that. And you were making some very, what would market terms be called, very aggressive calls, very confident calls, and they've pretty much all come right. I think the only thing that maybe didn't quite go your way was the 10-year bond yield that you were looking potentially would come a bit lower, maybe the dollar. But you actually talked about the dollar going up as well, and some factors that would confound that a little bit. But you were absolutely spot on with the direction of the market, with the aggression of it as well, which is quite amazing, really. So people, I think private investors, amateur investors, don't really realize how hard it is to get this stuff right. And when you do get it right, you should get the praise for it.
Yeah, it's amazing. I get beat up for timing because they want it to happen in some precise time frame, and I'll make the mistake of saying it could happen by this time or whatever, and it always takes longer. But what they don't stop and look at is that for 90% of the pundits out there, they didn't get the direction right. Never mind, I got the magnitude and I got the direction. Sure, it's taken longer, but that's the nature of bull markets. They stretch out.
Yeah, I have an expression: amateurs look for absolute precision, and professionals understand that there's risk, that things change. Your outlook could change because of certain factors that you're looking for. Maybe they all come together, maybe only a few, and you have to be flexible with these things. But in terms of your bullish calls, are you still bullish? Let actually, before we do that, I'm going to say what you said at the time and where the markets were, just to give people an idea of how good the calls were. So the S&P was at 5,000 when you called it. You said you were looking for 7,000. Obviously, it's now at 6,000, which was an amazing call. obviously because people were very, very bearish at the time and probably still are now. The Dow was at 38,424. It's now at 44,421, and you were calling for 55,000. The Russell, everybody hated the Russell. Oh my God, I couldn't find anyone who liked the Russell. You were bullish on it, calling for 3,300. It's at 2,258, so it's gone up, which is more than anyone else expected. And the Nasdaq was at 18,000. You called for 23,000, and it hit 22,000. It's now at 21,297 because of the volatility. Gold, you said, was going to take off, and actually gold had come off a bit and looked sort of like it was in a consolidation. You were like, no, this is going for 3,000, and it's now 2,833 and accelerating. Silver was at 22. It's now at 31, and your target was 60. All those are fabulous. So that's really shooting the lights out.
Yeah, I will. The only one I'll correct you is the Nasdaq. People get mixed up because I use the Nasdaq Composite,
Oh,
so
okay.
not the NDX.
Oh, okay.
So it's not quite that high, but it is 19 and change. And my target was 23. I've raised that to 25,000. I've raised my S&P target to 7,500. My Dow and Russell targets are still at 55,000 and 3,300 respectively. But I'm still extremely bullish. I think there's a final leg into a top coming this year.
So thank you for watching. If you have questions or comments, leave them in the comment section below. And if you're not a subscriber, hit the subscribe button, and that helps us get it out to more people. Thank you.